Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to quickly go over the latest earnings report of two Canadian real estate investment trusts that I personally invested in. And in my opinion, they have the best fundamentals between all Canadian REITs in the market. These two real estate businesses are Killam Apartment REIT and Granite Industrial REIT. They both reported their earnings recently, and in this video, I will analyze the numbers in these reports. I think I'm the only one on the internet and especially YouTube that talks about these two Canadian REITs, and in my opinion, both Killam and Granite are hidden gems in Canadian stock market. I believe Killam reported strong numbers while Granite reported okay numbers, but anyway, I personally bought more shares of both REITs after the recent earnings report, as in my personal opinion, both REITs are undervalued at the moment. Let's start with Killam. Killam is the largest real estate investment trust in Atlantic region of Canada with a focus on residential buildings and with a company HQ located at Halifax, Nova Scotia. They own and manage multiple properties in Nova Scotia, PEI, Newfoundland, and New Brunswick, and they have large exposure to real estate market in this area of the country where the price of real estate and land exponentially increased in the last 3 years, especially in Nova Scotia and Halifax. And this upward trend is predicted to be continued in Nova Scotia for foreseeable future. They were able to consistently grow their AFFO per share and their dividend while keeping their debt to asset and their dividend payout ratio in a modest level, which is really impressive. I should say, I think this was an absolutely amazing earnings report by Killam. Philip Fraser, the CEO of Killam, started this report with these sentences. Killam's second quarter operating performance delivered FFO per unit of 30 cents, a 7.1% increase from Q2 2022. We continue to deliver on our strategic targets, including 7.9% same property net operating income growth. With the completion of 72 million in dispositions in this quarter, we are progressing well towards our target of selling 100 million non-core assets, and we expect to exceed our capital recycling targets for 2023. Funds from depositions were applied against our line of credit, strengthening the Killam's balance sheet and increasing our capital flexibility. Debt to total assets was 43%, which is the lowest in Killam's history. So it's clear that the CEO of Killam REIT is extremely excited about this earnings report. Okay, now let's look at the key numbers. Adjusted funds from operation, or AFFO per share, which is the most important metric for a REIT, is up 8.3% year over year, which is really impressive. This is probably due to rent increases in turnover units. AFFO payout ratio is down to 73% from 75%, which is again great. It means the company has more cash on hand to reduce the debt, increase the dividend, or reinvest in themselves for future growth. Same property revenue is up 5.3% year over year, and same property net operating income is up 7.9%, which is great. Debt to total assets is down 220 basis points to 43.1%, which means Killam is reducing its debt on balance sheet with a rapid pace, which is the best thing they can do in a high interest rate environment. In terms of the debt management, Killam average mortgage interest rate increased by 20 basis points to 2.94%, and their variable rate debt has a relatively long maturity at around 4 years at the moment, which is important for me as it means they are not at any major credit risk in near future. The management team mentioned that they will be focused on further reducing the variable rate debt on the balance sheet in the coming quarters, which is exactly what I like to see here. Overall, I'm extremely happy with this earnings report, and I continue to buy more shares of Killam as I see this stock as one of the best plays in Canadian real estate market, particularly in residential real estate at the moment. Now let's move to Granite REIT earnings. Granite is a Canadian real estate company which can give you exposure to physical properties in the areas of logistics and industrial warehouses in North America and Europe. They have already a diversified portfolio of various industrial and logistical properties in 6 countries around the world, including Canada, US, Netherlands, Germany, Austria, and Czech Republic. The largest tenant of Granite is of course Magna, followed by Amazon, and we can see very established businesses like Samsung, Walmart, and Wayfair among their tenants. They also do not have much debt on their balance sheet, and in my opinion, this is one of the fastest growing REITs in Canada as demonstrated in these charts. They were able to grow their AFFO per share and their dividend while reducing their dividend payout ratio consistently and keeping their debt to asset ratio at around 30 to 35%, which is really impressive. I believe Granite reported okay numbers in the recent earnings report. It wasn't as good as Killam numbers. Let's quickly go over the key numbers. Revenue is up 18% year over year, which is good. Net operating income up almost 17% year over year. The most important metric, however, is adjusted funds from operation or AFFO per share, which was 1.9 cents per unit for this quarter versus 1.4 cents per unit last year. It was basically up only 4.8%, which is not bad overall, but for Granite, it was a slow growth. In fact, they earned less AFFO per share compared to the last quarter, which is not really ideal. AFFO payout ratio is now 73% versus 75% last year. It's good, but last quarter they reported better numbers, which makes it difficult for me to say this is positive for the company. The number of shares is still decreasing year over year. REITs usually dilute shareholders massively to fund their operations, but this REIT, Granite REIT, actually bought back the shares when the share prices were trading at a discount, which I love it. One more negative thing that I see in this report is their debt. Total debt of the company increased compared to the last year, which I don't like to see it here. Furthermore, their weighted average debt term to maturity is now 3.7 years, which is again not awful, but it's a little bit concerning. Overall, this report was not the best earnings report of Granite, but still, I like to see the numbers in this report, a modest growth in their AFFO per share and the reduction of the share count of the company. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for my other Canadian companies, particularly Canadian banks' earnings report, to hopefully cover those as well. But until that time, I see you guys in the next video. Farewell.